Why don't we start with your word of the day? It's boom. What's booming?
So this is in contrast to bubble. We are not in an AI bubble, in our opinion, and we think that this narrative can be dismantled by both the demand-supply imbalances that we're currently seeing, as well as the ROI on accelerated compute. So, I mean, bubbles are characterized by overbuild, oversupply, too much investment, inflated multiples. We're not seeing any of those things right now. In fact, we're in an acute supply-constrained environment, which we think persists over the next 3 years. And we're seeing this in the companies reporting this week. Yesterday, Amphenol grew its data center revenues 128% year on year. Vertiv's orders grew 60%. And when we think about this opportunity, it's a $4 trillion data center infrastructure build-out through 2030, which is 80 gigawatts. 1 gigawatt is a $50 billion opportunity. Only 6% of this so far on our numbers has been deployed. If we include all the projects that have been announced, and there have been many of those over the last couple of weeks, that only takes us to about 65% through the build-out by 2028. So we've still got 35% of this build-out to be announced, and we still haven't seen the earnings and the revenue acceleration from that 65% build-out. So we've got that to look forward to. And the final point on ROI is that this is accelerating. So traditionally, if we take a NVIDIA Hopper architecture over the last couple of years, the ROI has been around 10x. We've now moved to a 15x ROI using the Blackwell architecture. So this spend is justified.
Okay. You see a boom in the whole AI trade. You're naming some different stocks, but I wanted to let you get through that because you say right now there's 3 stocks that you don't even need to own, even though you're very optimistic about AI. And I think it's a bit surprising. It's Microsoft, Amazon, and Google, the hyperscalers. You don't even need those stocks? So it's just a Mag 4 in your mind?
So what we see with technology platform transitions is that the competitive landscape gets reshuffled. We see this time and time again, and we think 2025 marks the start of the changing of the guards, where we see new market leadership on the table. So Microsoft, Azure, AWS, they're losing market share to CoreWeave and Oracle for AI workloads because these are purpose-built for accelerated compute. Amazon's retail business faces faster growers in the likes of an Instacart or a Shopify. Google is under siege from OpenAI in terms of paid search click growth, which is deteriorating for the first time in a decade. So we'd far prefer to be owning the winners of this next technology cycle, which are AI native from the outset.
All right. I want to get to your pick as well. It's outside of the AI space, but it's AI related because of agentic AI. Talk to me about why you're so excited about the retail space and AI.
So we think that agentic commerce is going to redefine the retail landscape. And there's a lot of talk about how OpenAI is going after Google. We think what doesn't get enough attention is the threat that OpenAI and others pose to Amazon when it comes to agentic commerce, because Amazon adopts a walled garden approach. They're very, very unlikely to allow a third-party agent to crawl through their site. In fact, they're writing their AI policies right now to make it harder.
Shopify. So you're saying Shopify is using agentic AI in a way that's going to threaten Amazon's dominance?
Absolutely. So Shopify is positioning itself to be the agentic rails for e-commerce. They inked a partnership deal with OpenAI. And I mean, there are 3 things that you really need to be the agentic rails for commerce. You need the inventory, you need the real-time price discovery, and you need trusted payments. And Shopify has got the highest converting checkout on the internet. And so what matters here, it's not about how big the company is, so Amazon doesn't have an advantage. It's about the end-to-end technology stack and consumer intent. You've got to be where those consumers want to buy.